And hot diggity dog, you guys, welcome back to the Invested Dawg. And today's big old loser is Luckin Coffee Incorporation. Their ticket symbol is LKNCY. And they're a big loser today. They're not doing hot today. Luckin Coffee is one of the fastest growing coffee chains in China and has become the company that many investors are watching closely to try to get into that Chinese market. You know, Chinese people do not necessarily drink a whole lot of coffee. These past 3 decades, we have been trying to push that upon them, but they like to drink teas. They like to drink other herbal teas and coffee. They're not big into coffee. The company competes with other brands like Starbucks, some people say it's too big to fail. I don't know about that. I kind of have differing opinions, but they're competing against companies like Starbucks, but they focus heavily on the mobile ordering side, the delivery side, the smaller pickup style type of stores. Whenever there's a slowdown in the economy, people are not paying for convenience anymore. People are going to be saying, "Oh, I'll just do it myself. I'll go pick up the coffee myself." They're not going to be paying Grubhub or Uber Eats to go and pick up their coffee. So as coffee consumption continues to rise in China, many investors see that Luckin as a company trying to capture that large share within that expanding market. There are some people saying to buy. There are some people saying to sell. This company has not been meeting their earnings per share since Q3 of 2025, and their revenue versus earnings, they have a pretty big gap in between. We've only been able to buy into this company for 3 years, but still, I think one of the reasons why Luckin coffee stock attracts so many people is because the company operates in one of those larger markets. Like, coffee is very popular. Almost everyone drinks coffee daily. A lot of people, the first thing you reach for in the morning, some people don't reach for water. They reach for they are reaching for some coffee, some espresso, and some milk, and they're calling a day and trying to rush out of the door. And yes, people are constantly wanting the convenience of things. However, I don't know if this company is going to be able to keep up with the demand compared to how the economy is treating it. The company also has focused on a large number of locations all at once. They're trying to ramp up quickly. They're trying to grow their brand quickly, but I don't necessarily think that that's the smartest thing. They need to be looking at how the economy is doing. For example, I just did a Walmart stock company, a Walmart stock video the other day, and as you know, Walmart is a huge indicator of if the economy is doing well or if the economy is having a slowdown. If it's having a slowdown, Walmart tends to go down just a little bit before it surges up, because people are not going to be going out and spending money if they don't have any. Excuse me, hold on, I gotta sneeze. Oh, hold on, let me pause this. I feel it coming. Okay, I'm back now. So, they need to be looking at Walmart's stock. The company faced major accounting scandals in the past year, which caused some serious concerns for investors, and it's just damaging their brand. Let's look at 3 reasons why investors are saying, okay, hold on, let's take a break. Let's look at this company. Growth stocks are attractive to many investors, as above average financial growth helps these stocks easily grab the market's attention and produce exceptional returns. But finding a growth stock can that can live up to its true potential can be a little bit rough. That's why I do appreciate Saks. I appreciate Yahoo Finance. They are always on top of it with my research. The tasks of finding a cutting edge growth stock is made easy by researching on these platforms. So let's take a look at what we're comparing. Their earnings growth. Their earnings growth is a one of a kind. It's important because these stocks are exhibiting exceptional surge, profiting their levels and their attractiveness to investors. Investors are like, hey, can we make some money off of this? Can we buy this and get out quickly? I think that that's not a smart decision, only because when you make investments into the stock market, when you try to invest your money, you need to be thinking about the long-term goal. You should not be thinking about getting out and getting in within 5 days or 1 month or 6 months. That's a guaranteed way that you will lose money. And I don't care what anybody says. You are not smarter, or nobody's smarter than the stock market. Like it does what it wants to do for the most part. So why not just play safe? Why not just invest your money where you know that you can get a decent return from? Let me know what you guys think about Luckin coffee, and I'm not too crazy about this. One of the reasons why I don't buy into these type of consumer stocks is because everything is riding on the brand. Everything is riding on the CFO. Everything is riding on the COO. Everything is riding depending on if they can get this word out, if they can market this company properly. It's different from, let's say, like Pepsi or Coca-Cola, where they own so much. So they don't necessarily care about their brand because they own almost everything in the store. They own almost all the beverages that's out there in Publix or Walmart or Winn-Dixie or wherever you shop. Lion, wherever you shop, they own the majority of the shelf space. So Luckin is not quite at that level yet. They are focused on coffee. They're focused on growing their brand, and I'm not too crazy about that. If you have a different opinion, of course, share it. Let's go back and forth and brainstorm on if this is a smart investment to make during times of uncertainty, during times of recessions. And of course, you guys, this is the Invested Dawg signing off.